Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 8th of May. Starting off as usual with the FTSE 100, which is going on to greater glories, up and away over the last few days, and heading towards that big 8,500 level, which was our target, the top of that rising trend channel from back in the good old days, 2007, just before the bubble burst. And current situation is that we're expecting 8,500 by the end of this month, quite logically, and that's valid while we hold above the previous target there, 8,230, which was the top of that rising December trend channel. The red line there is the upper parallel of that particular channel and obviously coincides with 8,500. On the downside, if we do break 8,230, then probably towards 8,100 would be our favourite spot now. No lower than that. I suppose it might require that we head down to 8,044 on the old April high, but at the moment, ideally, we stay on the right side of 8,100. Moving on to the DAX, and here you can see that sell in May hasn't worked here either. We've got a rising trend channel there from back in October. We've broken recent neckline resistance around 18,200 and above that. Looking for up to 19,100 by the end of this month. That's speeded up from the end of next month, which is what we were fearing before. Obviously, we've got to clear the previous highs there around 18,500, which hopefully we'll do in the next 48 hours. 18,200 initial support, and then the floor of the channel there, 17,900, along with the 50-day line, the blue line there, potential support if there is a rug pull, which at the moment we are not expecting. Moving on to the Dow, and here the rebound very much in action there, and actually working out quite well. We had a gap down back in the beginning of April, so it's a bear trap island reversal, and then gapping up over the last few sessions above that 50-day line at 38,700, looking for basically the best levels of the year towards 40,000 by the end of this month. Might be asking a little bit too much given how much time we've got left in May, but while we're above that 50-day line, looking strong, and probably if there is any rug pull, then it would be back towards the floor of that rising trend channel from the autumn, 38,000, but not really expecting now anything lower than 38,500 or 400, which is basically the floor of the latest gap. Moving on to Bitcoin, which gave us a bit of a scare with that dip below the below the 60,000 level, but we bounced back quite well from that. Still slightly concerning that we're failing at the 50-day line around 66,000, and also that March resistance line. So if you are fearful of this market, you would be waiting for a clearance of 66,000. The other negative is the way that we've had another RSI failure at RSI 50, or a failure at RSI 50 in other words. So that's 2 in a month, and that does suggest that we might have to suffer another dip below 60,000, especially the longer it takes to get through 66,000. So a little bit mixed there for Bitcoin at the moment. Moving on to gold, and gold also looking a little bit tired at the moment. Support 22.1890, which is so far holding, and so far just about holding the floor of that rising trend channel from February. The nominal level there around 23.20, so I suppose we're just nudging above that. Still looking for a potential push back up towards 24.40 by the end of this month, but obviously time is running out, and we can't rule out a test of that 50-day line at 22.56 before we then have another go at heading up to the highs. In terms of the RSI, it's at 52, so it's on the right side of neutral, and that means that the glass is at least half full rather than half empty at the moment. Moving on to the stocks, and starting off with probably one of the more obscure situations, Aukett Swank or Swanky, and here we've got a situation where we're just approaching our first target there around 1.8 pence. Next target there up to 2.1 pence, but the excitement here on a technical basis was threefold. One was the gap higher at the end of March. Second was the gap close buy signal through 1.55 just in the last, basically this week. And the third aspect to watch is the way that we're back above April support there at 1.45. The longer we're above that, the greater the chance of not only testing or hitting that second target at 2.1 pence, but also getting up to 2.8 pence and last year's resistance. Next up, we've got Bluebird, and here you can see that the shares have, well, there's still just shy of our target there, around 0.97. Above that on an end of day close basis, looking for 1.5 pence. A July resistance line projection from last year, which is the upper parallel of that broadening triangle base. Ideally, we stay on the right side of 0.8, which is basically post-September resistance for this market. Looked at block energy quite a lot over the last couple of weeks, and here it looks as though we may be finding support above old 1.5 pence resistance. If that is the case, and accompanied by that golden cross buy signal that we had at the end of last month, we should see the shares up to 2.25 pence by the end of May. But the key here is holding 1.5 pence. Next situation is Deltex, which I suppose on the face of it doesn't look like a great prospect, but we have gapped up above the 50-day moving average at 0.12. Above that, there's just a chance of a move up to 0.19 on the top of that broadening triangle from back in the autumn. If you're cautious, you'd be waiting for an end of day close through 0.135, i.e. just above where we are now, to then trigger hopefully the move towards 0.19 and the 200-day moving average lurking there at that level. Time frame on that, hopefully sometime during the course of this month, while we remain above that 50-day line. On to EnSilica, which looked to be a very bright spark in terms of the fundamentals. It could be the UK's Nvidia, something like that. But here we've got broadening triangle in place since April last year. Top of the triangle there, heading for up to 85 pence, and we're looking for that while we remain above the latest gap, the gap there back in February around that 51 pence level. So above 51, looking for 85, and if you're cautious, probably wait for an end of day close through the 50-day line at 60 pence. But looks like enough's been done there with the consolidation over the past month. Another relatively obscure situation is Eco Animal, and here gapping through our previous target around £1.10. That leaves us looking for the next level up, which could be up to £1.50, which is the top of that broadening triangle from the end of 2022. And that target of 150, or in fact even 152, by the end of next month, valid while we hold above £1.10 and the latest gap. Another relatively obscure situation is Inspecs. Here, just trying to break that resistance line and the falling wedge from the summer of last year. That's around the 70 pence level. Above that, looking for up to 96 pence by the end of next month, which would also fill the gap down that we had back in January, which wasn't very pleasant. The upside valid while we hold above the 65 pence area, basically February resistance. On to Light Science, which had a decent RNS today. Looks like we will be heading for profitability in coming months. Rising trend channel there from back in July last year, looking for up to 4.5 pence, perhaps as soon as the end of next month. That might be a little bit optimistic, but the channel there suggests that above the 2.25 pence area, we head up to 4.5 pence over the course of the next 1 to 2 months. A good update on the industrial front from LifeSafe during last week, in fact, and I interviewed the company. Bear trap gap reversal, we followed through on that, and the longer we stay above the old December support there at 16 pence, the greater the chance of a move to 24 pence as soon as the end of this month. The other positive at the moment is, or the new positive, is the way that the 50-day line is now rising, which tends to be the first decent sign of a turnaround. Moving on to Kefi, which is also rehabilitating itself at the moment. We had a bear trap gap reversal yesterday. I shied away from looking at the stock yesterday, which I probably shouldn't have, but at least while we're above that 50-day line at 0.59, looking for 0.8 pence at the top of that broadening triangle from September, hopefully sometime during this month. Hopefully we'll get a repeat of the February spike for the shares. The only problem with this stock is that spikes don't tend to last too long, as you can see back in October as well. Moving on to Mila, whatever you want to call it. Here we've got a sideways shuffle at the lows, which tends to be one of the better setups. 50-day line rising and shares finding support at and above that. The 50-day line there at 0.58, above that looking for a penny as soon as the end of next month, especially while we remain above recent neckline resistance at 0.68. So that looks like an improving situation too. Tech is next, and here you can see that we've just hit our target there at 16 pence after the bear trap gap reversal. In fact, it was a bear trap island reversal, so gapping down to new lows and then gapping up off those lows. That suggests that we can look forward to a target as high as 22 pence, perhaps as soon as the end of this month, the longer we stay above recent resistance, the January resistance there around 15 pence, above 15, looking for 22 on Tech. On to the last three, and interesting fundraise from MetalNRG. I think market cap 800 grand, and they've raised $250,000, which is quite an achievement, I think. Looks like we're heading towards a golden cross maybe over the next couple of sessions or few sessions. 50-day line and the 200-day line starting to rise. We've hit our initial target there at 008, and above 008 we're looking for the next level up, which is 0.12, and that is derived from the upper parallel of the broadening triangle base that we've had since last summer. That target 0.12 could be hit as soon as the end of this month, especially while we remain above 007. On to the stock of the day, which Mobile Tornado, which finally managed to get its big deal. I think people have been waiting for that for quite a long time. Maybe one or two people successfully guessed last month that some good news was happening, in the sense that we had a sideways shuffle above a rising 50-day line. So that's maybe something to think about. But in the meantime, the longer we stay above the old December 2022 resistance at 2.65, or if we can stay above that, the greater the chance of a move up to as high as 6 pence by the end of next month. Obviously, the most likely target is one that we've already done at 3.25, which is the top of that broadening triangle from the end of 2022. So maybe the best already done there for Mobile Tornado, but we shall see. Moving along to the last stock, and that's Neo Energy, where it looks as though things are gingerly progressing, where we've broken out of that falling wedge properly now at 0.52. We also had bullish divergence, so a lower low there below 0.48, but at the RSI the same or slightly higher. That means we're still looking for 0.7 pence, perhaps as soon as the end of this month, but giving it at least until the end of June. That's it for me today. More updates tomorrow.